In this video, I'll be breaking down how much you need to make in order to afford a 2023 Toyota Camry. You should really consider following one of these rules in order to avoid making a huge car buying mistake that'll end up setting you back for years financially speaking. I've also got a link to a free auto quote where you could save up to about $600 a year in the description below, but more on that later. There are 4 options I'll be going over today. You can decide on which one suits you the best depending on how into cars you are. Some people out there just want a cheap car that's reliable, takes them from point A to point B, and then there's a couple others that are willing to spend more, sacrifice more in order to get the car that they really want. So stick around to the end of the video to find out which one of these methods would be best for your personal preferences and situation. This is 4-Wheel Finance, a channel dedicated to helping you make smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make. Please give it a like, subscribe, comment down below what other vehicles you would like me to review. The first rule is the 24-10 rule, and this states that you must put at least 20% down, you shouldn't finance it for more than 4 years or 48 months, and the payment shouldn't be more than 10% of your monthly gross income. Since the 2023 Toyota Camry has an MSRP of about $25,945, you would need to put down $5,185. And with the average new vehicle interest rate of 3.86% in a 48-month term, this would bring your monthly payment to $467.35. Take note here that you're also paying about $1,600 in interest. Bankrate states that the average monthly insurance cost is $148 a month, but this varies a ton from person to person. How old you are, your driving habits, your driving history, where you live, what part of the country, etc., what kind of car it is. So use that smart financial link I've got in the description below to find out how much it would cost for you to insure something like this. Completely free auto quote, takes like 20-30 seconds to fill out. This brings your monthly total to $615.35. Going back to that 24-10 rule, this would mean you would need a monthly gross income of $6,153.50, which would add up to about $73,800 annually. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car and put what would be your car payment of $467.35 in the market instead, over the course of 5 years with a conservative 6% rate of return, this would turn into about $32,600, gaining about $4,500 in interest. Take a look at those Acorns and M1 Finance links I've got in the description below. It's super easy to get started, and I encourage you to do so as early as you can, even if it's a small amount of money. And this is just for the first 5 years. If you continue that for 10 years, it would amount to $76,301.57 and over $20,000 in interest. Again, just at that 6% rate of return, which is pretty dang conservative. For reference, the stock market average is around 10% return per year. And the next rule here is my own. And for my rule, I think you'd have at least a 6-month emergency fund, invest 15% of your monthly gross income into your 401k, and max out both your Roth IRA and your HSA if you have one, and if you want to be a superstar. Yes, I know this seems like a lot of saving and investing, but I don't give you a monthly percentage rule you have to stick to in terms of your spending habits. So once you have these bases covered of saving and investing, it's really up to you to decide on how much you want to spend of your monthly income on a vehicle. If you want to go out to dinner more, if you want to shop on Amazon more, if you want to go on more vacations, it's up to you once you get these bases covered. And so this is more for the car person. If you want a car that's a little bit more expensive, as long as you're saving and investing how I've set up these rules, then I'll give you the go ahead and buy that car if you want and spend a little bit more extra money on it. And the investment portion just gives you a little bit of financial security later in life when you're probably going to need it the most. The majority of people say that, well, nothing's really guaranteed, and that's very true, but it's difficult to put a value on having peace of mind for yourself or your family's future. The average American lives to about 78 years old, and you're going to want that money when you don't want to work anymore, so it's best to get started investing now. The next rule I've got here is the Dave Ramsey rule, and he thinks you should have a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your annual gross income, and you should purchase it in cash. Given that the 2023 Toyota Camry starts at about $25,900, your gross annual income would need to be a minimum of $52,000. Ideally, it's nice to purchase a vehicle in cash, as you would avoid having to pay that $1,600 in interest, and your insurance would be lower, but not everybody's got $25,000 in cash that they could buy in a car outright. And the last rule here is the 1/10 rule, which was developed by Financial Samurai, personally one that I think the majority of people trying to build their wealth should consider. It really doesn't allow you to buy a new vehicle, but allows you to spend responsibly, which reduces your financial car ownership stress and increases your net worth a little bit faster over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a vehicle. It can be new or old, but obviously for the vast majority of people, it's going to be used, and you should own it for at least 5 years, but ideally more. And the theory behind this is to minimize your financial stress. It frees up a little bit of money to invest in assets or opportunities that may come your way, things that go up in value. It's much more stressful and difficult making life decisions and important decisions when you're worried about your payments each and every month. Once again, this is 4 Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them down there in the comments below. And don't forget to give a look at that Smart Financial link. It's a completely free auto quote that takes like 20